Live from London, I'm Guy Johnson.
And from New York, I'm Bonnie Quinn. This is Bloomberg Markets. Time for Futures in Focus. A slightly different format today. He is in studio with me, Scott Bauer, Prosper Trading Academy CEO, typically at the CME, but as I said, in New York today. So welcome. First, let me just inform everybody that we did get inventories and the US oil output has hit a fresh record. Prices dropped, gasoline and distillate bills were higher than forecast, and refinery utilization edged lower. So we're seeing sort of the same trends come up that we had seen, in weeks previous to the last couple of weeks. Scott, you were short oil. Do you stay short oil?
So I have been, and I'm looking for that 55.5, 56 area to actually cover it with some tight stops on the upside. And what's really unbelievable, Vonnie, you just talked about, the builds is just, it was about a year ago, we were talking about 10 million barrels a day output in the U.S. We're going to be up at 20 million. At least that's what OPEC is expecting not too distant future. So what's really unbelievable to me is that even with the phase one deal hopefully being signed later today and some demand popping up from China especially, the supply is still far outweighing. When you look at the fundamentals, supply is still far outweighing the global demand.
That said, we got the Iran situation and suddenly prices spiked. We had Brent over 70, we had WTI, a good $10 higher than where it is now at some point. Were you able to stick with your short position at that point, or what do you do in a situation like that?
So that happened overnight, and I actually was, because by the time I woke up and saw the markets, I guess I may have been a little bit fortunate. But yes, I did stick with it and actually sold a little bit more when I had noticed it, and then had a very tight stop on that extra amount that I had sold. And you know what? It was one of those one-offs. It was more of a psychological type of event, geopolitical risk that we had in the marketplace to see that pop.
Thing is, we know that in hindsight, and we're not even sure that we're in the territory of hindsight yet. So how do you hedge for another situation like that cropping up?
So you put some stop orders out there. Right now, my stops in West Texas are up around the 59 area, which would still make it very, very profitable. And I think in this environment, with the geopolitical risk that we're seeing out there, anybody that's going to trade and really just, put a line in the sand here, you have to be able to use stops. Otherwise, you can get run over.
All right, Scott, thank you for joining us in studio today. Real pleasure. As I said, Scott, typically at the CME for us, we do Futures in Focus together. Today he is in New York City. That's Scott Bauer of Prosper Trading Academy.